Wow, guys, what a great quarter. Alibaba just blew this one out of the water. The market doesn't like it, but I have no idea why. I love this quarter. I think they did great, and this is exactly what I've been waiting for. We actually have growth in Taobao now. This has been the problem for the last couple of years. Taobao has been very, I don't know, would say flat growth to negative, with the worry that PDD is eating their lunch, which I also own, by the way. But I think that these guys are out of the mud now and they're moving. And this just shows how, I think this shows how constrained the economy was in China due to these lockdowns. Like they were talking about, well, why did Taobao do so well? It's because advertisers are advertising more. That's what the revenue is. But if you're in a lockdown, people will be reticent to advertise because there's uncertainty around the economic environment. Will people use their cash to buy things, or are they going to hoard it because they're worried about losing their jobs in lockdowns, or they need to protect themselves? So if you get negative economic situations, people tend to hoard cash, and then when things get better, they spend. And that's what we're seeing here, and I think that's why we're seeing the growth back in Taobao Tmall. So that segment grew 12%. Now within that, Taobao grew faster. International is looking phenomenal at 41% overall growth. Now this could be an unexpected home run here that's on the way, but I would still give it a few more years. They're still just barely cash flow negative. Local services also up 30%, logistics up 34%. Cloud, this is again anemic, and this is the one thing that I think the market would find concerning here is they're really not getting any traction here, even though they've lowered prices like they said. Maybe there's a delay on that, but I have some more thoughts on cloud, why I think this will accelerate in the future. The other thing I would say here is that the cost cutting is starting to really pay off, right? So they started cost cutting a few quarters ago, which was where their profitability was expanding. And they had, this quarter, they had the percentage of revenue was down by 6% year over year. And that's pretty big when they started at 12%, like a 12% margin there. So they've effectively increased the margin there by 50% just from cost cutting. So what we're seeing now is we're seeing the compounding effect of both cost cutting, and now we have some growth on top of that. So this is what I say, like when companies go through recessions or negative economic times, they get more efficient and more lean. And then when they come out and the growth starts up again, they're actually a better business. And I think that's what we're seeing with Alibaba right now. So I'll go over my thesis again. I'm going to talk about spinoffs a little bit here and some other economic news that's come up. But I do want, before that, I want to talk about patience. So us in the value investing community often talk about how, oh, my time frame is 5 years or it's 10 years. But if we look at our holdings periods, I bet you a lot of us, and me included, I'm not putting this on anybody else, but I think that, well, I am putting this on other people because I think most of us do it. When you buy something, it's really easy to say, oh yeah, I'll hold this for 5 years. But I have held Alibaba for 2 years, and I promise you, it has been a long 2 years. What's happened is Chinese stocks have just languished. They've done nothing, while other things that I've owned and other things in the market that I'm looking at have taken off. It's very hard to hold through this stuff. Right? So 2 years seems short when you're talking about it, and it's long when you're holding. And I've seen a lot of value investors come and go in that 2 years since I've been holding this company. So I have a little tip for people out there. What you can do is figure out what's my expected holding period for the stocks that I own, right? Do that, write them down, say, oh, this is 3 years, this is 5, this is 10, this is lifetime, and then go back and look at the actual holding periods for stuff that you've bought in the past. And me doing that, there's a mismatch, right? My average holding period is probably between 1 to 2 years, where I say it's 3 to 5. So I think that investing is an exercise in getting more honest with yourself. I think that that's really what's made me a better investor, be able to look at my mistakes. And this is one thing that I might suggest other people look at as well, because I found it very helpful. Okay, so on to the thesis. The original thesis here was basically that you're buying Taobao and Tmall at a pretty good price, right? It's right now it's like you're probably getting it about 9.5 times operating earnings on Taobao and Tmall. If you take the cash out, it's closer to 7 times earnings, and that's what you're buying. You get that for your money. That's a good deal for those businesses. And then on top of that, you get all these lottery tickets, right? You've got, like I was talking about, you got logistics, you've got international commerce, and a lot of people are betting on cloud, and you have other stuff in there too that might take off. And if any of these pieces works, this is an absolute home run, right? So basically, you're buying one, you get 7. And then you just wait to see what works. Now, a lot of us, like I said, a lot of us were betting on cloud, and cloud has been the big disappointment over the last, let's say, year, 18 months, as the growth has been terrible. And there's concern whether Alibaba has failed on this. Now, I don't think they have. I'm actually going to talk about that in a bit. But the other part of the thesis is that the sentiment has been terrible over this whole 2 years. China has had horrible sentiment, and except for a brief period this year where everything went up like crazy, the sentiment has stayed very bad. So the thing that happens with Chinese stock is they really rocket in both directions, right? Based on China sentiment in the US, because the US actually moves the Chinese market. If people are negative, everybody runs away. If people are positive, everybody piles back in. So if we get a change in sentiment, that could compound the gains we get from the actual business, right? So I think that there's a potential large upside here. And then again, the risk is always Joe Biden, maybe it's Donald Trump soon, but the US is picking fights with China all over the place these days, and then China retaliates, and then that could just get worse and worse, and you might end up in a situation where there's an all-out economic war. Okay, so on top of that, the thesis, I can add a few things to the thesis here, right? They've announced all these spin-offs. Those could unlock value as they get through them. Ant could be the big one there. And then, and one other thing that I would add, I was reading the transcript here, and the new CEO of Taobao Tmall, she said she's got a 3-year plan to get this stuff really moving by investing in the merchants and the customers, and she's saying that's already starting to pay off, and that's why we're getting this, part of the reason why we're getting this bump in users and revenue, right? So now we have a catalyst with a time frame, which I really like. So we know in the next 3 years she's either going to succeed or fail at her plan. If she succeeds, we all win. If she fails, that can be, for me, an indication that I need to exit. In terms of spin-offs, now I personally love spin-offs. I think they're fantastic. Joel Greenblatt does some good work on them, talks about them a lot, and I suggest looking that up if you haven't. But in this situation, they're not my favorite. I'm not super excited about the spin-offs that are coming with Alibaba, because I think that a lot of their stuff that they're spinning off is so small that it's really not going to unlock much value. Right, Ant being the one that maybe isn't like that. The Ant IPO could be huge, but we never know if that's going to come or not. But like stuff like cloud or logistics, I would rather they just keep that under their roof and incubate it a little bit more, and then spin it off when it's worth more. Now the counterpoint to that in my head is that the new management, the new dedicated management for each segment actually may make a difference. And that's part of the reason I like spin-offs, is because, they get attention on them now, right? Like if I use my own company as an example, we have a few different arms in our business, and the biggest arm that produces most of the cash flow gets most of the attention. The hires are, when we hire people, it's built around that segment of the business, and the other segments are a little bit ignored, right? So they don't get the support that they necessarily need. They get the support that the other part of the company needs, as they get a piece of that. So in my experience, now what we're doing is we're moving the companies, we're separating the companies so they can actually do this. So from that perspective, something like cloud could really start to get some traction here as they separate from the main business. And so that's, there's a potential real upside there. But I would say that we're not going to get really a real big increase in realized value immediately when it gets spun off, because right now it's not worth a whole lot compared to the main business. Now I want to expand a little bit on cloud here. Now my understanding is that cloud in China is in a different part of the growth phase than the US is, right? So they're a few years behind, let's say 5, but there are 3 main types of cloud computing as a service. One of them is infrastructure, then there's platform and software. And basically what it is as you move down that chain, more and more of the things you do on your computer are outsourced to the cloud. Now, personally, I don't have any programs installed. Well, I have some installed on my computer, but really most of the stuff I use is on the cloud. That's in the software as a service segment here. But whereas China is not that far along, and if you look at my understanding is that as you get towards the end of this with software being on the cloud, the profitability and margins and volumes are much, much higher because there's way more stuff that's happening on the cloud, and they need more storage and more computing and stuff like that. So China's in the very early stages, and they're in the least profitable part of the cycle, right? But over time, they will move down the scale. So if Alibaba can sort of maintain its position and just wait for these tailwinds to push through, then what you're going to see is the volume, the revenues and the margins pick up. And then even further down the road, there's the AI movement where even more computing power and more storage is needed online. And so that would even push it further. Now, I'm not betting on the AI part because I think that's like a decade away. Don't quote me on that. It's more than my investment window. So I'm not really counting on that part. But I think that for me, the cloud story is not dead yet. And I'm interested to see what the cloud segment of this business can do when it's really focused and it's not being just as a part of this bigger company. And very quickly on valuation, I'm just going to do a forward looking valuation here. There's a chance that the company makes over $10 a share this year, let's say adjusted, because we use the adjusted measures for them. But right now the market cap's at 244 million. They've got 244 billion. They got 59 billion in cash. So the enterprise value is less than 200 billion. I'm saying it's 185. And over $10 earnings, that would put them at 26 billion in earnings in 2024. And that would mean that the forward PE is 9.4. If you use the enterprise value, but back all that cash out, you've got an enterprise value to earnings of just over 7. So this is a very cheap company right now. And like I said, you get all those lottery tickets for free here. This is basically, you're just paying for Taobao, Tmall, and you're getting all the other stuff for free. So to me, that looks like a great deal. And I may add a bit more here. Not investment advice. Don't invest on YouTube videos. Okay, last bit here is about the macro situation. I just saw a data point that said China has now entered deflation. The CPI was slightly negative, and the producer price index was very negative. And this caused a sell-off today, which is August 11th. And I think that's totally wrong. Inflation is the bad one, to my mind, because it reduces the tools that the central banks and governments can use to solve the problem. Because usually what they do is increase money supply and push money out into the system to solve the problem. But if you have inflation, you can't do that because you just pour gasoline on the inflation fire. Whereas if you've got deflation, they can print and spend money all day long and push it out into the economy and jumpstart the consumers. And so I think this is actually a green light for the central bank in China to actually stimulate. Now, whether they do that or not, I don't know. I never know what these guys are going to do, and I can't bank on it. But I actually like this because it gives them the green light to go for it. And they have shown in the last year that they are willing to help the economy along. They're technically a communist country, so that means the central government is more responsible for all this. Now, if you look historically, you would say, actually, they're in a lot of ways they interfere less with the economy than let's say where I am in Canada or in the U.S. But that's up for debate. But I do like this. I do think that the CCP is going to help the economy along if it looks sluggish, and that's ultimately good for stocks. So that's it for this video. I'm really happy with this result, and I think we might have liftoff here. All right, thanks guys. Catch you in the next video.